Recent blocks, Professor Bakshi, you mentioned to find the size of the pond, which is you need to fish in a large pond. What is the definition of large pond and how can one go about identifying it?
Well, I was referring to just now in the answer to your previous question. We should be sort of grateful that we are not living in Bangladesh or Sri Lanka or Pakistan. We live in what has become a large economy in terms of GDP. And we are almost hitting $4 trillion in GDP. And large GDPs produce large market caps. India's market cap is now more than USD 5 trillion. And by the way, this is after accounting for currency depreciation. And that's just an outcome of being a large economy that keeps getting bigger. But it's also an outcome of the fact that there are businesses that have been part of GDP but are now entering market cap. These are privately held businesses which were not there in the markets but have gone public recently. LIC is the case in point. There are so many of them which are multi-billion dollar market valuations, but they've gone public. They've been around for a long time and their economic activity contributes to GDP but has not yet entered market cap. So it's a large pond, and the pond is going to get larger, and you are trying to fish in a large pond by constructing a 10, 20, 30, 40, 50 stock portfolio. So I go back to the point I was making, that idea is to construct filters to quickly reject what doesn't make sense. So if when you have that, you have to say no to basically almost everything. And there are all sorts of things that will pop up which will excite you or entice you, and you have to basically go to the discipline of what makes sense, because at the end of the day you can't own everything unless you buy an index fund. Even then, an index fund will replicate a 30 or a 50 stock portfolio. Even the indices are rejecting more stocks that are available for investment.